This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Wednesday the 17th of April in London. I'm Stephen Carroll.
And I'm Lizzie Burden. Coming up today, UK inflation drops, but not as much as expected as traders trim their bets on BOE cuts.
The Fed's Jerome Powell concedes that rate cuts will need to be delayed due to persistently high inflation.
And Jamie Dimon goes all in on AI. Speaking exclusively to Bloomberg, JP Morgan's CEO makes the case for it transforming banking, but admits it will replace jobs.
Let's start with a roundup of our top stories.
UK inflation slowed less than expected last month as falling food prices were partially offset by the cost of fuel. CPI rose 3.2% in March compared with a year earlier. And while the figure was lower than the February reading, it was still a fraction higher than economists had forecast. Headline inflation has fallen sharply from a peak above 11%, with a further fall toward the 2% expected this month on the back of falling energy prices.
Today's data comes just hours after the Bank of England Governor Andrew Bailey said Britain is on a different inflation path to the United States. The comments imply the BOE might cut interest rates before the Fed. Bailey says US inflation is being led by demand, unlike the situation in the UK.
I think the dynamics of inflation are rather different between Europe, and I mean Europe geographically now, and the US. We're still seeing the extension of the process of coming out of the big supply shocks that we had, the impact of the war, the impact of coming out of COVID.
Bailey was speaking at the IMF spring meetings in Washington. In its latest economic outlook, the fund predicted AI could boost the size of the UK economy by 16% in the first 10 years of adoption, higher than most other countries.
Also speaking stateside, the Chancellor Jeremy Hunt says the prospect of interest rate cuts could lift the mood of voters and their view of the Conservatives ahead of a possible UK general election. He told Bloomberg the economy will be in a better place in the months ahead.
That situation we were in 18 months ago with inflation at 11.1%, that is well and truly behind us. We think we have very strong growth prospects. The feel-good factor as interest rates start to come down, as people start to feel higher real disposable incomes, will be stronger in people's minds come the early autumn.
Hunt's comments back up speculation that the government's planning to hold an election in the autumn. Markets are currently pricing in a first reduction in the BOE's 5.25% rate in November.
Turning next to the Federal Reserve Chair Jerome Powell, who says policymakers will probably have to wait longer than previously anticipated to cut interest rates. His comments come after 3 months of surprisingly high inflation readings and jobs data that suggests the US economy remains resilient. Speaking during a panel discussion in Washington, Powell said rate setters need to see more evidence that the pace of price rises is cooling.
So we've said at the FOMC that we'll need greater confidence that inflation is moving sustainably toward 2% before it would be appropriate to ease policy. We took that cautious approach and sought that greater confidence so as not to overreact to the string of low inflation readings that we had in the second half of last year.
Powell's remarks represent a shift in his message. Policymakers narrowly penciled in 3 interest rate cuts in forecasts published last month, but investors are now betting on just 1 to 2 cuts this year.
Meanwhile, the European Central Bank President Christine Lagarde has doubled down on the message she gave last week that the bank is on a firm path to a first rate cut in June. She told CNBC that as long as shocks don't derail the slowdown in Eurozone inflation, it'll be time to moderate the restrictive stance in reasonably short order. Lagarde wouldn't comment on how many cuts in borrowing costs are likely to materialise in the coming months. Speaking in Washington, she also highlighted that the German economy may be starting to recover after being rocked by a series of shocks in recent years.
The Dutch tech firm ASML was hit by a slump in demand for its advanced chip makers, with bookings missing estimates. Europe's most valuable firm in the space reported €3.6 billion worth of orders in the first quarter of the year. Shares down 3.7% this morning as we go into the second hour of cash trading. The company's been hit by a weakness in demand from clients in Taiwan and the US. ASML expects weaker than expected sales in the second quarter before demand starts to pick up.
Jamie Dimon has told Bloomberg that artificial intelligence will transform banking, but it'll also lead to job losses. The JP Morgan CEO's comments come after he devoted a chunk of his annual shareholder letter to the importance of AI for the Wall Street giant's business and for society at large, likening its impact to that of the steam engine. Here's what Dimon told Emily Chang on the latest episode of The Circuit.
But the way to think about it for us is every single process, so errors, trading, hedging, research, every app, every database, you're going to be applying AI. So it might be as a co-pilot, it might be to replace humans. Like, AI is doing all the equity hedging for us for the most part. It's idea generation, it's large language models, it's note-taking while you're talking to someone, and while it's taking notes, it may actually say to you that, here's the thing of interest the client might be interested in, all error, all customer service. It's a little bit of everything.
But it is going to replace some jobs.
Of course, yeah. But I look, folks, people have to take a deep breath, okay? Technology's always replaced jobs. Your children can live to 100 and not have cancer because of technology. And literally, they'll probably be working 3.5 days a week.
You can watch that full, wide-ranging interview with Jamie Dimon on the latest episode of The Circuit with Emily Chang on Bloomberg Originals, available on the app or YouTube or as a podcast.
The US is set to place sanctions on Iran's drone program after the country's attack on Israel. According to the White House National Security Advisor Jake Sullivan, Washington is coordinating a comprehensive response alongside G7 countries. US Treasury Secretary Janet Yellen says the measures will come into play shortly.
I fully expect that we will take additional sanctions action against Iran in the coming days. We don't preview our sanctions tools, but in discussions I've had, all options to disrupt terrorist financing of Iran continue to be on the table.
Janet Yellen speaking there. The US will also announce sanctions against entities supporting the Islamic Revolutionary Guard Corps and Iran's Defence Ministry and expects allies to follow. In a moment, we'll bring you more on the rate repricing after today's UK inflation data, as well as what top central bankers have been saying at the IMF and World Bank spring meetings in Washington. Another story that caught our eye this morning. I don't know if you've seen the pictures on social media of the flooding in Dubai.
Well, of course, Stephen, if I haven't told you already, I've been in Dubai recently and I just didn't believe it that you could get hailstorms there. One occurred as I was mid-camel riding lesson, in fact. But it's because of this thing called cloud seeding, which honestly I thought was a myth when they first told me about it. But it's because of the water security issues in the region. And so whenever you have... They try to coax more rain from clouds, essentially. They put natural salts like potassium chloride, I've been researching.
Nope. Scientist Lizzie Burden.
And they put it when there are clouds to improve the rainfall. And it's been dubbed the rains of goodness by Dubai's media office. But by the looks of the videos on social media, I think you can be the judge of that.
Yeah, I mean, flights disrupted, schools shut, people told to work from home as well. Pretty dramatic rainfall in Dubai, but really interesting to get some of the context as to why the rain is perhaps worse than otherwise would be, given the additions made to that by the Dubai authorities.
Yeah, not an act of God by any means. But there's a lot of happening elsewhere on rates markets this morning. Jay Powell's hints yesterday on later rate cuts and the hotter than expected UK inflation print this morning feeding into all of that. Our managing editor for FX and Rates, Rachel Evans, with us in the studio to pass it all. Rachel, thanks for being with us. Let's start with the Fed. How significant is the shift in Jay Powell's language on the rate path?
I think it's pretty significant indeed. We'd obviously had the dot plot that came out at the Fed's meeting in March suggesting that we're going to see 3 cuts by the Fed this year, of course, subject to the data. And Powell has basically come out and said, that data's not looking so good. And that really casts a pall over that outlook for rates. At the moment, markets are seeing about 40 basis points of cuts by year end. So that would equate to 1 full cut and maybe a chance of another. And I think that kind of really tells you just sort of, where things are headed. There's been a lot of Fed speak recently away from Powell, suggesting that 1, 2 cuts might be more appropriate than 3. So I think there's going to be a very interesting conversation amongst the Federal Reserve officials when they next meet in early May.
Yeah, indeed. And of course, we're hearing plenty from those central bankers at the IMF and World Bank spring meetings as well. Bloomberg's Lacey Meakin's with us in studio this morning too, to help us look into the UK inflation numbers, numbers, which is another piece of this puzzle too. Lucy, good morning to you. Just talk us through the headlines from these inflation numbers. It does seem to have been a bit of a surprise on some points.
It's not all awful, but at the end of the day, it missed estimates. People are a little disappointed by that, and that's led to a fairly dramatic repricing of rate cut bets. So now people are expecting just one 25 basis point cut this year. A few weeks ago, we were seeing 2 to 3. A second one is now a bit of a coin toss. Coin toss? Coin toss. So it's a bit of a change. People are a bit disappointed, but as I say, it could have been worse.
Yeah, and for the markets, Rachel, the big point here is partly the divergence between European interest rates and American interest rates, the ECB and the Bank of England. What's the big next data point to watch in this debate?
Well, look, I mean, we've kind of got a bit of a lull on the US data front. I think we have GDP coming out Thursday, PCE Friday. Those are going to be things that people really want to watch as we sort of head towards the next big line in the sand, which is really going to be that Fed meeting on May 1. That's going to be the thing that people are listening for, and it's really the commentary heading into that about exactly what that data is telling people. We've now seen CPI in the US, we've now seen non-farm payrolls in the US, both showing that the economy is running really hotter than forecast. So GDP will give us another read on that. PCE will also give us some kind of sense of that too. But really it's going to come down to what the Fed says on May 1st. That is really going to be the best guide for the market on where they're headed.
Lucy, we've also been listening to the conversation that Andrew Bailey was having while he was in Washington about who goes first. Is it a really big deal that he suggested the UK could cut before the US?
Yes, I think so. And I think where he's saying it is important too. These big meetings are so fascinating because they are talking all the time. I've seen central bankers' names pop up on other central bankers' phones. They do talk all the time. But when they're actually in the same room and they're talking about divergence, I think that is so interesting. And it's a really big message from Bailey, particularly when he's got quite a divided committee at the moment. We've got people like Megan Green, who will be speaking later, and also Jonathan Haskell is speaking later, so we're going to watch out for those. But they've both been very recently voting for hikes. So yes, I think, one, it's important, but two, also where was really important.
Yeah, I mean, it is interesting to think about Andrew Bailey's saying that really the BOE's got its own mind, it could go first. But I wonder whether that's actually going to happen, Rachel. From what you're seeing, from what you're hearing, is it just that they could or that they will?
I mean, time will tell on that. I think it's probably more likely that Europe diverges than the UK when it comes to who can cut first.
Although Andrew Bailey was very keen to point out when he said Europe, he was
geographically.
He did that, which I actually was silently applauding, frankly, because it's one of my massive bugbears as people suggesting the UK is somehow no longer part of Europe.
Exactly, just a floating island.
Yeah.
But no, yeah. So I mean, the prospect of the ECB cutting first, I think, is more real than the BOE managing to do that. I mean, when you look in the market. Currently, the expectations amongst traders for the Fed cutting and for the Bank of England cutting, it's both November as the first time a cut is fully priced into the market. There is a chance they go earlier, but that's the first time it's fully priced. Whereas for the ECB, we're looking much earlier. We're looking at sort of July kind of time, June, July. So I think when you're kind of thinking about that divergence, like Lagarde has been very clear that she will diverge from the US if deemed appropriate. Bailey is trying to follow a similar line and flagging that there are different issues in the UK versus in the US as it relates to inflation. But these hotter inflation reports have got to give central bankers pause. It's not long ago that we were at 11% in the UK.
Rachel, I wonder, we were talking to Mark Cudmore earlier from our Markets Live team, and he was saying, his expectation now, or his view is there won't be any cuts at all from the Federal Reserve this year. How much of a repricing could there still be in markets if we see rate bets shifting even further?
Yeah, I mean, I think you saw, a shift in yields even yesterday on the Powell comments, the 2-year going through 5%. That's pretty significant. It wasn't that long ago that, we were talking about sort of yields heading back down, heading towards 3%. And now we're back kind of approaching sort of the cycle peaks that we saw in October last year in kind of the 5% area. We still got a distance to go, for kind of the 10-year, the benchmark. And I think, at the moment, given given that we do have 40 basis points of cuts priced for the year. If that were to go away, that could really send yields significantly higher. And of course, you've got to remember, investors came into this year expecting lots of cuts, 6 cuts, and yields to fall significantly. So this is a pain trade for a lot of people at this point.
Yeah, and it was kind of outlandish at one point that Larry Summers was suggesting there was a meaningful chance there would be no rate cuts this year, and now that just seems an even more likely prospect. But Lucy, just to end with you, where you had Powell speaking yesterday, where you've got this likelihood maybe of no cuts from the Fed this year and 3 hot inflation prints out of the US, at what point is it just going to be acknowledged that there's been a policy error?
Or, to put the other side, having already been accused of sounding like Jeremy Hunt today, put the other side, maybe there's a market error here. Maybe people just went into this trade too fast, went too far with it, got overexcited. It always happens. But I think actually what we've seen is that in many ways the policy is being fairly consistent. Maybe the communication was a little over-exuberant at times. But in the UK, at least, we've got plenty of people. We've got a completely divided committee. So maybe people just went too far with their bets.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.